This week, political uncertainty in Malaysia, EPF delivers strong results but sees challenging times ahead, a document leak revealing suspicious fund movements at some of the world's biggest banks, and the US stock market closed in the green. This week, Datuk Seri Anwar Ibrahim claimed he had the numbers to form a new government, but with few details, this remains an uncertainty. And it is precisely this lack of certainty that may weigh on the Malaysian market. So far this year, our domestic equity has been outperforming regional peers, only declining around 5% on a year-to-date basis, compared to more than 20% declines in Singapore and Thailand. But will we continue to reign supreme as analysts worry that political uncertainty poses a risk to the Malaysian equity market? With Sabah state elections also happening this weekend and talks of snap polls going around, this will certainly be something to keep a close watch on. The performance of the Employees Provident Fund, more commonly known as the EPF, is something that is always keenly watched, as over 7 million Malaysians in the private sector actively contribute to this as part of their retirement planning. Over the weekend, this statutory body under the Ministry of Finance reported a second quarter gross investment income of around 15 billion ringgit, up 24% from the first quarter. Now, CEO Tunku Ali Zakri alias attributed the strong performance this quarter to the company's strategic asset allocation framework, with over half of this 15 billion ringgit coming from equities, since this asset class has rallied in the past few months. Now, if we just take a look at the headline number, we should be pleased because this may indicate a good dividend for this year. But Ali Zakri says EPF maintains a cautious stance, noting that it's still hard to say how COVID-19 will impact its assets and investments until a vaccine can be guaranteed. Plus, there's also external challenges like US-China tensions and fluctuating oil prices. Now, the question is though, how will EPF ensure their investment framework stays up to date as markets have been evolving more rapidly over the years? And will the change in their strategic asset allocation to include more overseas investments pay off? And for EPF contributors, the question that lingers will be what kind of dividend rates can we expect, since a simple extrapolation may not be wise in these volatile times. Meanwhile, the global banking industry was thrust into the spotlight this week, with leaked documents revealing movement of suspicious funds between banks, funds possibly linked to money laundering, corruption, and fraud. It's estimated that there was as much as $2 trillion in transfers, enough to fund 27 years of Malaysia's government expenditure based on Budget 2020. The leak implicated over 90 financial institutions, including some of the world's biggest banks like JP Morgan, Deutsche Bank, and Standard Chartered. But it also named local banks like AmBank, Alliance, and CIMB, amongst others. In fact, Malaysia got a special mention as JP Morgan moved over $1 billion for Joe Low, who was allegedly the mastermind of the 1MDB scandal. That said, banks have responded saying this in fact shows that their screening and monitoring systems work, and it's up to enforcement officials to take action. It's important to note though that just because a transaction is deemed suspicious doesn't mean that it is automatically illegal. US markets closed in the green last night on the back of optimism around a new coronavirus relief plan, as Democratic Speaker of the House of Representatives Nancy Pelosi said she was ready for negotiations. We've seen US equities correct recently. The S&P 500 has fallen around 9% from its August peak, reducing the index's gain for 2020 to just 0.5%. Is this simply a healthy correction or the end of the rally as investors get nervous over the US presidential elections and rising COVID-19 cases in the US and Europe? And that's what's been moving markets.